All right, let's go ahead and check. Make sure that the stream is working fine. 3, 2, 1, check. And it should be good to go. All right, there we go. Awesome. Perfect. All right, hello and welcome to today's stream. And we're going to, as usual, go ahead and discuss some of the stocks that we're going to be interested in during this upcoming week, and also discuss the ones that we talked about last time. So let's go ahead and open up our notes and see what kind of stocks we should start with. So actually we'll go ahead and start off with the one that I have pulled up on the screen, which is going to be IVR. But actually, before we dive into that, just a quick disclaimer. We're doing this every Sunday at 7 p.m. Eastern Time. If you're interested in doing some breakdowns of the stocks, then don't hesitate to leave a comment in the comment section below. Make sure to subscribe, turn on the bell notification, so every time I go live, you're going to be able to see me. We're only doing it every Sunday at 7 p.m. for now, but depending on how popular this channel is going to be and what kind of feedback I'm receiving from you guys, I would be happy to do it more often. But as of now, we're going to go ahead and start off with IVR. And IVR is the main reason why I want to talk about IVR before we start talking about any other of our stocks, is because it's following this very, very interesting pattern. So we identify this pattern of this very, very strong trend line of support that it has been following over the past couple of months. So ever since November of 2020, right around here, this golden cross happened where the 20-day SMA line crossed the 180-day SMA line. And by the way, I'm using 180 instead of the 200-day SMA line just because it seems to be a little bit more accurate for me. And again, this is just a personal preference. But ever since the earnings report came out on November, we saw that this, again, golden cross happened. The price of the stock ended up trading above 180 and above the 20-day SMA line. And currently we are trading way further than that, but we still follow this trend line, which acts as a support. So the main reason why I'm interested in potentially investing into this company is I would want to see their reversal. So if we look at the 1-year chart, we can also see that the company, actually let's look at a 3-year chart for a better understanding, because we already covered a 1-year chart. So over the past year and just 1 month, the price of the company tanked all the way from 17.77 cents all the way down to $2.85, losing about 83, almost 84% of its value. In this case, the stock ended up going back up to about $3.84, and it's continuously making higher highs, and it's way on the undervalued range. So Invesco, IVR, let's look it up on the Yahoo Finance. So if we look at the Yahoo Finance, we can see that it pays 8.51% in dividends. If we look at the 5-year chart, we can see that it's been trading at $14 a share for a very long time. And if we look at the maximum chart, so ever since 2009, 2010, it was basically hovering around the average price of about $15 a share. And again, if you guys have any ideas for any of the companies that you're interested in, don't hesitate to drop those in the comment section below. We're going to go ahead and start making a list of the companies that we talk about. And yeah, definitely we'll break down a lot of different stocks today. I'm very, very, very excited. So IVR was the very first one that we talked about, and it seems to be on the oversold side. We're also going to look at the technical analysis. All right, so if we were looking at a 3-year chart, we can see the MACD indicators approaching the levels with consolidation where it was before, right? Nowhere near the price level of which it was trading at before, but the MACD indicator is approaching those levels, right? And we can see the RSI indicator is also it's hovering around 56, 55, which is perfect. So it's not overbought, nor it's on the oversold side. What I would want to do is I would want to follow up a little bit closer on this one. So what I'm going to do is I'm going to set up my alerts, but we'll do a 180-day chart. And as long as it continues trading above 180-day SMA line, that seems to be a very good potential buy for me. So at or above, and we're going to set up the next alert at or below. Perfect. Again, it's one of those companies that ended up losing a lot of its value just because of the low interest rates. And we're going to take a look at those after this. But IVR it's very tempting to look into the company that has 8.51% forward yield dividends. Its still earnings per share is still negative $9, but the 1-year target is also, again, not a very strong financial set right for the company, because we see that the 1-year target is at $3 based on Yahoo Finance, and 8.51%, that's most likely the most exciting part about this. But so Invesco IVR way on the oversold side and still continues to make higher highs. That's why I wanted to be added to our list. So IVR is the very first company that we talked about. All right, before we move on to the next company, let's look at our interest rates. Let's look at what our interest rates are looking at like today. All right, so for interest rate charts, I believe it was, actually, yeah, this is a perfect one too. Nope, this one. Let's look into this one. So the 30-year, so 10-year treasury, okay, 30-year fixed mortgage rates. Yeah, let's look into this one. So 30-year fixed mortgage rate. Well, we don't want to do that. And let's go ahead and zoom in on this. Boom, just like this. So we can see that the interest rates are going up right now. So we can see that the lowest it's been was at 2.67%. It's currently at 2.97%. It's a very interesting pattern. So yeah, we definitely need to look after the stocks that are still undervalued, and in order for us to be able to find those, we gotta follow up on the stocks that we talked about earlier. All right, so the next stock is going to be MFA stock. So we followed up on this one. I think over the past 3 weeks we have been following up on this one, and every single time we set up alerts for it to go higher, it seems to be breaking those alerts. If we go ahead and zoom out on it and look at the 1-year chart, we can see that it formed a very strong line of resistance that has acted as a support only once, and it starts making higher highs right now. It's one of those companies that also lost a lot of value at the very beginning of 2020, end of 2019. So what is it, almost 82%, and was able to recover about 50% of the previous price that it was trading at before the the Rona situation. But over the past 336 days, it was able to recover 206%, going all the way up from about $1.33 all the way to $4.28. It's one of my favorite stocks, and was able to recover very, very quickly, very steadily as well. And if we'll look at the chart too, I want to still look at the 1-year chart. We can see this very strong trend line. Let's see if we can draw it perfectly. This is very, very close. Perfect. So we can see that it was forming this bullish pattern, flag pattern that it ended up breaking out of, and continues again making higher highs. So the way I would trade this one is I would definitely want to set up some alerts and see whether it's going to continue making higher highs, or if it's going to continue confirming the support level as its current support, right? So the previous resistance level as its current support. And if you're watching and if you have any ideas or any of the companies that you want me to break down, just don't hesitate to leave the ticker symbol in the comment section, and we're going to go ahead and break those down at or above. This one was way too high. At or above, and we're going to go ahead and set up another one, which is going to be also at or above and at or below. Fantastic. All right, so that was MFA, and we're going to go ahead and add this one to our list. So MFA, nice. All right, let's see what the next company is going to be. Oh yes, we definitely want to follow up on GoPro. I believe, there we go, GoPro is right here. Yes, so we talked about this stock and we ended up setting up our alerts right above this one. This alert was from a couple of weeks ago when we were thinking that it might potentially continue to go higher than this. But during the earnings report, it ended up dropping closer to 180-day SMA line, confirmed about $7.50 level as a support level, and was able to go up by almost 50%, 45% from its lows, right, within just a matter of days. So I wonder what acted as a catalyst for the news that came out for it to start trading so much higher. But I love the fact that it's still trading above this trend line that we identified earlier. So GoPro is another good one. That is not something that I would want to invest into for a very long term, especially with this specific valuation, just because it's a little bit on the overbought side and it's also approaching this previous level of resistance. I like to trade as a spoiled brat, and it's one of those things that if I see that it's not as good of a value as some other companies that we identified that we will talk also about in the future of the stream, but I'm not going to be investing into something that is on the overbought side. That's just, again, my mentality. You don't have to do that. You don't have to follow my suggestions. This is for entertainment purposes only. And yeah, again, if you have any other ideas for any of the stocks you want me to break down, feel free to share those in the comment section, and we are going to continue our stream. I wonder how long I'm gonna last today. It's gonna be fun. I think it's gonna be fun. I'm feeling like we're gonna find maybe 2 or 3 very good stocks that we haven't talked about over the past couple of weeks. But so GoPro, I'm glad that we talked about this one. Let's go ahead and add this one to our list. GPro. And before we move on to the next one, let's look if GoPro actually pays any dividends. So GoPro doesn't pay any dividends. Okay, that makes sense. So over the past year, yeah, it just continued making higher highs. Over the past 5 years, so it's approaching this, again, level of multiple year resistance, right? We saw this resistance level being in January of 2017, then again September of 2017, and we're just getting closer to that level. And even on the short-term chart, we can also see that it is at this level again, right? That we were back in February, beginning of February. So we just got to be very, very careful. If I would want to trade this company, if I'm convincing myself to trade this company, I would want it to go down, confirm a certain level as a support, and then move on to higher highs. But I would want it to be trading probably about $8.50 in order for me to justify this purchase in comparison to some other companies. Yeah, so it went up by 10% in one day on Friday. So let's go ahead and see what else Yahoo Finance recommends for us. So Twitter, Umbrella, and Under Armour. Actually, I don't know how Under Armour is doing. I feel like I haven't talked about this one for a while. And there's a reason why. Okay, so yeah, it's one of those stocks that is also very much capable of recovering fairly quickly, fairly steadily, and it's approaching this level of multiple year resistance. So back in 2018, back in 2018, 2019, it was hovering over around $19 a share, and that's where we're at right now. So not the best one to buy, again, from my perspective. Lululemon is just way overpriced. The pattern is very similar, I think, to Tesla, actually. Let's see, Shopify is also another one that is doing really well. It's very hard to, talk about the companies that, oh yeah, it might not be the best buy right now, but the company has been performing so well over the past year or two. My mentality on that, again, is I'm trying to find the stocks that are the most undervalued. And yeah, it's just, I feel like there's so many different stocks out there that we haven't really talked about, that we haven't covered yet, that we should definitely talk about. And if you have any ideas of any of the stocks that you want me to break down, don't hesitate to share those in the comment section. But as of now, we're going to go ahead and continue. KMI, we talked about this one. KMI seems like it's building up for another breakout. Very interesting setup. I like this setup. All right, Let's go ahead and identify our level of resistance, and let's go ahead and delete some of these drawings so they're not confusing us any further. Alright, so this one we're going to remove, and we are going to keep this one because it's a multiple month resistance level, and we can see some consolidation at about the same exact level. We can see this trend line, very strong trend line, multiple month trend line, and it's still trading above 180 and above 20-day SMA line. Let's look at the 3-year chart and see how 180-day SMA line, how far it is. Is it actually 3? No. Let's see. So 1 year, 3-year chart. Okay, so we're approaching 180-day SMA line. It's 6.1% away, and usually it had acted as a resistance, probably about 1.5% higher than the actual price at which it was trading. So we have about, let's see how much profit margin we have. We have the profit margin of probably about 4.5–5%. So 4.5%. I don't think it's really worth my time in comparison to some other companies that we're going to talk about, especially considering the fact that it's approaching 180-day SMA line. I do like investing into KMI. It had done really well, especially with the second bottom and the recovery after that. It had been consistent. I think if I would want to trade this company, I would definitely want it to be a swing trade, not a... And what kind of swing trade? It would probably have to be a very short-term swing trade, and I'll explain why. So if you look at the 20-day chart, you can see a lot of consolidation at this level. You can also draw a line and see this multiple day trend line right here. Perfect. And we can see a line of resistance that was confirmed over the past 3 days. So if we see that the company breaks out above this level, above $16.42, that would be a good identifier, a good indicator, right, that the company is actually pushing up. But if we look at a 1-year chart, we can see the resistance levels right here. We can also see the other resistance that we just talked about in a 3-year chart. So we're just going to be very careful with how to trade this one. I do like the fact that the company is actually continuing making higher highs. It doesn't seem like it's showing any signs of slowing down, and I believe KMI actually pays dividends. It pays 6.42% in dividends, so that's very good. Yeah, if you look at the max chart, it used to trade back in 2014 at $41 a share. The company had dropped significantly all the way down to $14.92, and that was the very bottom of it. Then once again it started making higher highs, but never was able to recover to the previous highs at which it was trading at before. Another example too is we're seeing a lot of the companies, just like MITT and YMT, that have the similar pattern right up until 2015 that dropped. Oh, I apologize, didn't get much sleep. That dropped all the way from $42 to $16, losing about 63% of their value. But we're only able to recover just a portion of the earnings, portion of their value, but we're never able to fully recover to the previous level. So we're just going to be very careful with how we trade this one. If you decide to buy into it, you just gotta keep in mind that there's a line of resistance at 15 level, at $15, at $15.32. We see another one at $14.92. So as long as you are trading above those levels, there will be supposed to be acting as a support. And with this being said, that might just be a good purchase. With 6.42% in dividends, KMI is going to make it to our list. Let's go ahead and add this one, KMI. If there are any other stocks you want me to break down, again, ticker symbol format in the comment section, and I'll be able to see it here. I will talk about it some more. All right, the next stock is going to be AKR. I'm so happy this one is doing really well. Let's look at a 180-day chart. So good. We saw this pattern before. So perfect. Okay, good. We can see that the company ended up making higher highs. Now it's trading above this very strong level of resistance. It did not confirm it as a support. It just ended up flying out of the shelves and 33% higher than the previous line of resistance. If we look at the 1-year chart, actually, yeah, it's a little bit longer than a year. We gotta start looking at a 3-year chart. We can see that it's approaching a 180-day SMA line that has acted as a resistance prior to this. So we're just gonna be, again, very, very careful with trading stocks that are way overvalued right now. I can see that a lot of money is actually being pulled out of tech stocks and being invested into real estate investment trust funds, just smaller cap stocks. Small cap stocks are doing really well right now. We're going to review some of those a little bit later, but $21 a share, I believe it's a mid-cap AKR. Acadia Realty Trust, yeah, so it's actually a small cap size company. Let's see, on the 1-year chart, very interesting, lots of volatility. Definitely seems to be on the overbought side, but again, we can see that it was trading back in 2005 at the same level, and then back in 2012, 2011 at the same level, and beginning of 2012, and it was still able to go up higher. Very interesting. So 2.84% in dividends, and the company's AKR, very interesting. I feel like this one is also not the best deal out there. We had talked about so many different companies, and I'm excited to find something else, something that we haven't really talked about. So AKR is doing well. I mean, it is doing well. You can't say that it doesn't. Like it's continuing to go up ever since June of 1993. The company ended up just making lower lows and created this very strong support level of $5.25 a share. It's just very difficult to say because of the volatility of the markets. Very hot. So yeah, $2.84 a share. Very, very cool. So a 5-year chart, yeah. All right, so AKR is not really going to make it to our list just because it's approaching the 180-day SMA line and approaching this level of resistance that is about, what, 5%, 6% lower than the current trading price. So still getting on the overbought side, but again, you can also see that we talked about this company so much, and we set up our alerts. Usually you would see that I set up 4 alerts, 2 below the current trading price and 2 above the current trading price. We don't see any above this level, which means that we already talked about this company. It just got triggered, so we are doing fine in that position. And let's go ahead and talk about something else. Let's talk about DUST. 1-year chart. Wow, yeah, 1-year chart is just not very good. All right, so dust. Okay. What can we see? Let's go ahead and remove this. Let's remove these drawings. They're not very applicable at this point anymore. We can see a very strong support. I like the fact that the company is approaching 180-day SMA line. We can see that it's forming this head and shoulders formation. It's a very bearish formation, but once we see where it's going to continue to go up, because we can see that British Petroleum is doing the same thing, BP. It also had and shoulders formation that ended up breaking above the right shoulder and continued to make higher highs, and seems to be forming this cup and handle formation, but more on that later. So DUST is the one that we're talking about right now. So DUST has about 15% profit margin. Very interesting. Has about 15% profit. DUST. We're definitely going to add this one to our list. DUST. So DUST, let's see if it actually pays any dividends. All right, so this company pays, okay, so 2.89% in dividends. It's a very small cap, very small cap stock, so $100 million in net assets. If we look at the max chart, we can also see lots of manipulation, extremely high prices, and then ever since 2016 just dropped all the way to the bottom and started trading. Oh, this is probably like an ETF. Yeah, it is an ETF. Okay. 1 year chart, yeah, continues to make higher highs. If I would want to trade this one, I would want it to be confirming this level as a level of support, right? So we can see that it was a resistance level at $21 a share, and once we can see that it actually confirms it as a support, we'll have a little bit better understanding of how we would want to trade this one. But 289% in dividends, not the best. We've seen better, but day trading might be a good one. Let's go ahead and talk about BP. So we talked about British Petroleum so many times already on this channel, during the streams. I love the fact that the company pays a lot of dividends and has existed for a very long time, and the price was undervalued for a very, very long time now. So if you look at the 5-year chart, all the way throughout 2020, the price just continued to drop. And on the very bottom, when it was at $15.48 a share, it wasn't there for too long, started recovering, currently trading at $26, almost $27 a share. Pays almost 5% in dividends, so 4.67% in dividends. It's near the fair value, even though I don't tend to look at the Yahoo Finance indicators here. But yeah, so British Petroleum, how would I want to trade this one? If I am committed on buying this stock, I would want to see higher highs, right? I would want to see some sort of a confirmation that it continues to push up. One thing that I really like is this cup and handle formation. So this is a cup and a handle formation, very bullish pattern. Trading above 20-day and trading above 180-day SMA line is doing really, really well. Let's see what we can talk about once we look at that 3-year chart. Okay, so we can also see that the company is about 24-25% below 180-day SMA line. Next major resistance is going to be at $28.37. That's at least what we would expect, and it's about 6% higher. Are there any stocks that we can invest into that show more potential for profit? Yes, absolutely. There are a lot of other companies that we talked about that would have a lot more potential for profit. But with British Petroleum, they obviously follow the oil price, right? If oil continues to go up, the British Petroleum tends to go up, just like ExxonMobil. Let's go ahead and check out oil prices. Okay, so oil prices are continuing to go up. I don't like this. So if we look at the 30-year chart, yeah, so it's approaching this again line of resistance actually at about $61 to $65 a share, or per barrel, I should say. And if we look at oh, actually, let's not go that far. Let's look at 2000. So majority of the time, if we look at the past decade, majority of the time the oil used to trade, actually I would say 50-50, used to trade for this part of the decade below $60 per barrel, and then for about, what is this, ever since 2004 to 2014, actually we're looking at a 20-year chart, for about a decade it was trading above this level, and then for another decade it was trading mainly below this level. Very interesting pattern. So BP, you can see some of my trades happening here, but all right. What can we say about BP? Should we invest into something that is already on the overbought side, or can we say that it's on the overbought side, or can we say that it still might be a good potential buy just based on our analysis off of the actual financials of the company, right? So the fact that the oil continues to go up, and BP, they pay 4.67% in dividends. I think it's one of the good stocks that you can still invest into, that I'm going to invest into, that continues to show us overperformance, especially if you're investing long term. And the way I would invest into it is I would not want to invest all my money right away into this company. I would want it to actually continue making higher highs, and I would want to continuously buy a portion of the stock. I'm actually going to write this one down just because it's the one that we cover BP nearly every single stream that we do. And if I'm interested into buying this one, what about the level of resistance? So we can see that 2010 closer to 2016, the next level of resistance is going to be at about 28.89. So only about $2 $2 more of profit margin up until the next major resistance, multiple year resistance. I do like the fact that the company is worth $92 billion. It's a very stable, very strong company. Let me know what you guys think in the comment section. We'll talk about some other oil stocks in this stream a little bit more. But BP, liking it so far, and 4.67% in dividends. And I would want to take a position. I think I would want to add on another maybe 30 shares of the stock. That would be good. So I'm gonna write this down for myself, and I'll write it in the chat as well. So we just talked about IVR and IVR, MFA. We talked about G Pro, KMI, DUST, and BP. And again, if you have any other ideas of what you want me to discuss, what you want me to go over, don't hesitate to share those ideas. And we are going to talk about some more stocks here in a minute. So potential buy, boom, there we go, awesome. So that would be some of our potential buy for this upcoming week. So let's go ahead and should we switch up gears and actually talk about something new instead of talking about the ones that we already identified so many times, that we talked about so many times already? We will. Let's just go ahead and briefly go over some of the, okay, yeah, let's talk about this one. Yeah, as you can tell, we also talked about this one. It ended up breaking above 180. Well, actually, if you look at a 1 year chart, it's trading above 180, and above 20-day chart, we can also see a big spike. It doesn't look like big, but it's actually 20% from the previous line of resistance. If we also look at the 3-year chart, we can see that the price of the stock ended up dropping from $72 all the way down to $9.32 a share, losing about 86% of its value. And at the same time, it continues to make higher highs, and we can see this recent 20% spike up. On the RSI indicator is approaching the overbought level at about 70. And we can see that the next level of resistance is going to be at this valley. I believe it's 2018. Yeah, so this was December of 2018. So about $25 a share. So we can still see a potential profit margin of about 10 to 12% up until the next level of resistance. We can also check out a 1-year chart and see how this company has been performing, making higher highs, consolidating, higher highs, consolidation. I really like the pattern on this company. So DFEN. Let's see if DFEN is going to make it. Yeah, so DFEN is a very small cap stock. We can also see on the 5-year chart, it looks fantastic, right? It looks way undervalued. Looks like it's recovering really, really well. It yields just 0.5% in dividends. I believe those were cut just recently. If we look at the maximum chart, ever since 2017, the company has been able to recover and continue making higher highs that are a lot more significantly higher than the stocks that we've identified before. So DFEN, very, very, very interesting. DFEN. I don't know if, so this is the ETF. I don't know if I own any in my other account. So what I would want to do is actually, I'm going to log in on my phone and see if I have any of DFEN on my Roth IRA account. And if I don't, I might just add up some positions to it. I think tomorrow is going to be interesting. I think tomorrow is going to be very, very interesting. Do we think that tomorrow is going to be green day, or is it going to be a red day? tomorrow is most likely going to be a green day. So we just recently opened up in Australia and it's selling off. So usually whenever we see a green day basically on Australian market, then I usually tend to expect, actually, what is this? This is not ASX, this is a specific company. Oh, we are doing fine. So it continues making higher highs. We continue making higher highs because it was like, that doesn't sound right. So over the past 6 months, making higher highs, had a little bit of volatility, confirmed it as a support, making higher highs just like S&P 500. Very, very similar pattern. Lots of money is getting printed across the entire world. So it's just pumping up all of the stocks, and it's just such an interesting situation that we're going through right now. But tomorrow, we can expect, at least as of now, another green day, another push up. All right, and we actually, DFEN, let me see if I actually have this one on my phone. DFEN. Count positions. DFEN. I don't see it. I have about 30 different positions right now, but DFEN doesn't seem to be one of them. Yeah, DFEN is not one of them. All right. So we'll follow up on this one tomorrow on DFEN and see how it's doing. But Australian market is continuing to go higher, so it is what it is. Let's go ahead and move on to something different. Let's go ahead and move on to something that is also on the oversold level. So expense ratio is 1%, 8%, $8.50. I think we're doing just fine on a 5-year chart. We're doing fine too. Very interesting, 21.92%. Very, very interesting. Okay, so DFEN, what I would want to do is set up new alerts. I'm really curious to see where this ETF, I apologize, is going to go. Gosh, man, I should sleep some more. At or above, and at or below. Perfect. X, we have steel continues to go up. British Petroleum, we just talked about this one. GSK. GSK seems like it was able to find the expected level of support here. Still continues making lower highs. And I'm not very interested in that one, but WLFC, interesting, very, very interesting. Seems like this one was a little bit delayed. We have earnings report probably coming out on Monday, 3/15 on the 15th. Yeah, so it's coming up tomorrow. We are probably going to see a lot of volatility tomorrow, and regardless of how what the earnings report is going to say, it's going to have a big move. I would expect it to continue, to go up, just because of the recent consolidation closer to the line of resistance. We're definitely going to be adding this one to our watch list, especially if you look at the 3-year chart, right? We can see that we can actually, let's see where the next line of resistance is going to be, right here, which is about 37.41, but that's a long shot to call it a major resistance. Major resistance tends to be 180-day SMA line over the most recent higher peaks that we've seen before in some other companies. So if we have to make a correction, 15% of the next high, I like this one, WLFC. We are definitely going to go ahead and add this one up. WLFC, awesome. And 5-year chart, it's doing WLFC. That's the one we talked about. On the okay, so on the max history, it's way overbought. Doesn't pay any dividends. It's a very small cap stock. Very, very interesting. You know, as much as I like the consolidation that we saw right here, if we look at the 3-year chart, we don't see the entire history, and it looks like it has a lot of potential to go up to $60 a share again, which would mean about 100% extra potential profit from the current trading price. But I'm not entirely sold on this one. It used to trade at this level, but it was way overbought, and then it just tanked down to $18 a share. Looking at the 5-year chart, sure, in 2017 it was trading at $23.80, and for a while it was trading at about the same level. It didn't show any growth. If I would have to trade this one, here's what I would do. I would wait for the earnings report to come out. If I'm a day trader, I would act on it on Monday on the earnings day. And as soon as it starts to continue to move up, I would buy. If it starts to go down, then I would short this position. But in this case, yeah, I'm not very sold on this one, just because we're trying to find a long-term investment companies on this stream, on this channel, and this one just seems to be way overbought in comparison to all of the other multiple year charts and price levels at which we were at before. Yeah, the fact that the company had existed ever since 1996, at least that's what Yahoo Finance is showing to us, I don't think I would be very interested in buying into something that has already been able to recover all the way from $18 a share to $35 a share. So maximum level, not very ecstatic about it. Max chart, I'm not very interested in this. But if I would want to trade this one, yeah, it definitely would have to be a very short-term swing, and preferably would have to be after the earnings report. So WLFC, we're going to add this one, and we're definitely going to go ahead and say that this is going to be a short-term swing. Awesome. Short-term swing. All right, so cold, not very interested. We overbought. We can see ANIK, Anika. So ANIK is the ticker symbol. Let's look at the okay, so this is a 3-year chart. That's good. So yeah, we're definitely approaching this very strong resistance level. We had a very large red candle and then green candle that was able to recover about 50% of that candle. But again, not very sold on just one green candle. I would want to see a repetitive pattern of them going up and making higher highs before investing into the company that is not doing super hot. But let's look at some other ones. Wow, that is so interesting too. Okay, so EVRG. All right, so we've identified this level as a very strong resistance that ended up being broken out of. Then let's go ahead and remove the drawing so we are not confusing ourselves on this. And let's draw another level of support, or I should say a resistance, which is going to be at around this level right here. So that is very interesting. So the company is approaching this level again, and it's actually a very bearish pattern. So it's a downward looking flag pattern, for the lack of a better term to say this, but the company hasn't been trading long enough in order to populate 180-day SMA line. As you can see, that there's only like a little green glimpse of 180-day SMA line, but if we look at the 20-day SMA line, it's still pointing up, which is good. We have RSI indicator that is not on the overbought level. We can see a MACD indicator that is also pointing up with both of the arms, as we say. And let's see where the next major resistance is going to be besides the current level at which it's trading, right? So we can definitely identify this level as a resistance because it was consolidating here and here, and acted as a resistance before this level, and acted as a support again at this level right here at this time, which was back in June of 2020. We can also expect that the company, if it's going to continue to go up, it's going to meet the next major level of resistance, which is going to be at $60 a share, which is only 5.5% higher than the current trading price. Not the best stock that we've seen so far, but yeah, definitely one of those stocks that we're constantly following up on. Wow, what was I doing here? This is a lot of charting. If you guys have any ideas on any of the companies that you want me to break down, any of the ones that you're currently looking at, don't hesitate to, there's so many things you can act on in order to get some of the support, some of my ideas on the stocks that we constantly talk about. For starters, you can leave me a comment and let me know what you think, and let me know what kind of companies you're looking into buying, and we're going to do a breakdown of those. Okay, JNUG, oh my. Okay, so they ended up, I believe this was beginning of 2020. Yeah, so they lost a ton. This is one of the ETFs that had just been losing constantly, making lower lows. Yeah, we're not interested in JNUG. We're actually going to go ahead and remove JNUG from our watch list. T-Mobile is bouncing off of a 180-day SMA line. We're doing fine on that. Let's go ahead and look at the 3-year chart. Definitely on the overbought level. Not extremely interested into investing into that one. Alibaba is continuing to go down. I'm investing into this one on my Roth IRA account, and I'm waiting for the shares to split at some point. They just keep talking about it so many times over the past couple of years, but it hasn't. I apologize, but it hasn't really done that in a while. So we're definitely not going to be spending too much time reviewing this one. So Alibaba, good stock. I believe they pay some dividends too. I haven't shopped in Alibaba in a while now, probably now in maybe a year and a half, because I feel like DHgate is a little bit better. But yeah, they also basically, the DHgate and Alibaba, they're basically the same thing. They just have, and let's actually look at that. Yeah, so all right. Let's look at Alibaba. Yeah, so this is what Alibaba's website looks like. So they basically connect wholesale, retail wholesalers, basically vendors, right, with affiliates, with the middleman, and with the actual buyer. And we can also look at DHgate, and we can also see that DHgate is doing the same exact thing, right? So they're basically doing what Alibaba started doing, except I think DHgate has less regulations. I'm not gonna actually, yeah, they have a lot less regulations, and I don't really like that. But a lot more flexibility than Alibaba. I know that lots of dropshippers are using that. I also was wondering about what kind of stock I wanted to talk to you guys about one specific stock that I was really interested in. But before we dive into that stock, I want to look at Xiaomi, which is I believe it's Chinese tech company. It's tech giant, and I believe some of the news came out on Wall Street Journal saying that they should be able to start trading on US markets at some point. Wall Street Journal, let's see. No, yeah, there we go. Wins the court ruling. Halting U.S. investment ban. Okay, so basically U.S. investors can actually invest into the company. I don't think it trades on U.S. markets. I think it's only on Chinese. Yeah, a traded company that produces commercial products that's only controlled by independent. Okay, shareholders and is not effectively controlled or associated with any other ownership or controlled by PRC or in security service. The judge said in an opinion using the abbreviation for People's Republic of China. Very interesting. Yeah, and I believe that they're definitely pushing 5G. Yeah, interesting. Very interesting. I like this company. They came out with lots of different technology, like gadgets tech gadgets that I love. Like they have their version of a Fitbit. That one is really cool. Their phones they're very good. They're very close to Samsung phones, and they are very competitive on Chinese markets and overall global markets. Especially, they're very popular in Europe. I don't know if any of you guys are familiar with that, but Yeah, well, that was a little tangent, but let's go back into doing breakdowns of some of our stocks. The one that I wanted to talk to you guys about was actually, let's look at VOO, which is basically an ETF for S&P 500. Let's look at the 5-year chart. Yeah, so we definitely can see that the VOO is definitely on the overbought side, just continues making higher highs. Can you say something bad about the company that just continues making higher highs, or S&P 500 that continues making higher highs? No, not really, especially for investors. It's extremely beneficial, but since we see all of this extremely high growth, does it make sense to trade like a spoiled brat? Does it make sense to invest like a spoiled brat? Does it make sense to invest into something that has the most potential? I think right now it makes the most sense to spend the most time to actually search for individual stocks to invest into. We can see a lot of these ETFs doing a very good job at recovering after a big loss. But again, how much more growth are we actually going to see? There's a lot of information that is hovering online around the idea that, oh, it's probably going to be like a lost decade. We're probably not going to be able to really make much money over the next decade because the market is just going to continue just hovering at around the same levels at which we are hovering at right now. Retail investors and some of the other companies are pricing in the lockdowns that are going to be, that they're going to not have those lockdowns anymore, right? In a lot of different companies, the consumers are going to start spending more money on goods and services and travel. Speaking of travel, we can actually look into airline stocks. Let's look at DAL, Delta Airlines. As you can tell, right, so beginning of 2020, company drops down to $25 a share for airline stocks. Warren Buffett sells majority of them. Then they are able to recover all the way to $49.83 a share. Don't pay any dividends. Earnings per share are still negative $19.49. We can see lots of volatility happening here at the very, very bottom, right? But again, we're approaching this $49.83 level, which is basically a very major line of level of resistance, right? Level of support in the previous price trend. So we just got to be very, very careful in the markets like this. Let's look at Tesla. And American Airlines is doing, by the way, very, very closely to Delta. Gosh, I can't believe that Tesla was trading at just such a low valuations. So currently trading at $693. P ratio. Look at this P ratio. That is unbelievable. 1,083.95. Mind-blowing. Just mind-blowing. 5-year chart, extremely high growth. Look at a 1-year chart. We saw a double bottom here at $560 a share. TSLA, yeah, we can see a little bit of recovery. We can see lots of volatility, lots of jumps after the market close. And yeah, let's look at a 1-year chart. So, okay, perfect. So we've already identified this very, very strong level of, resistance. But this is an inverted head and shoulders formation. This is a shoulder. This is another forming shoulder, and this is the head. This is bullish in this case pattern, but we would want to see a recovery down to $163 level, to the previous major line of support, and then for it to start continue making higher highs. I would not want to invest into something that is still trading below a 20-day SMA line. As long as it's trading above 180-day SMA line, it's reasonable. At least from my personal experience, especially if you look at MACD indicator, that is way lower right down here, right? So we can see that both arms are crossed and they're pointing up, both of them, which is really nice, which is a very good positive bullish indicator for the company's stock. Again, the patterns tend to repeat themselves, but they don't have to. So just got to do your own due diligence and monitor this one. Now, very interested into buying Tesla in those kinds of valuations at which they're trading at right now. But in the future, potentially, I would want to see it go down just a little bit more and actually create a floor with a little bit less volatility. But yeah, Tesla, awesome company, awesome company. Lots of great ideas, just seems to be way overvalued at this level. So let's go ahead and look into something different. What else can we look at? We can also see that the company, we can see that the interest rates, we already talked about those, that they are continuing to be down here, right? Slightly going up, just like we've seen it before, right? Every single time whenever it makes this very, very low dive, it starts to make a recovery, just like it did before, but then it continues tumbling further down, tumbling further down, tumbling further down. We're currently trading at almost, wow, yeah, so the current interest rates are closer to 3% than they, very interesting. If we look at VA loan interest rates, I tend to use those as an indicator of what the lowest interest rates can possibly be, and 2.75% with Veterans United. Yeah, it's very cool. I think it's very, very cool. If they offer such a low interest rate, which, yeah, the lowest one we've seen was 2.67 nationwide. They're doing fine. They're doing still. They're offering below rate. That's possible. So Tesla. Let's actually find the ones that we already talked about that are still on the oversold levels, and these are going to be the ones that we might potentially be buying into. So let's look at FinWiz. We talked about FinWiz so many times, and I feel like FinWiz might be a good one. Markets are just on fire with some of these stocks, some of these penny stocks especially. We talked about eBond. We talked about this one before. Sorry if I'm being annoying with my drinking here. Just drinking some hot tea. All right, so that's good. We got EVC ended up breaking out. No, nothing major, nothing very appealing. Let's look at our biggest losers. 30%. Wow, just tumbled. MRKR. MRKR minus 23%. How crazy. 1 year chart. Yeah, it just continues making low lows. Not very interested in something like that. Nope, thank you. I'm good. Nothing very appealing, nothing very exciting that really jumps out. SNDL. SNDL, $2.35 billion valuation. 1 year chart continues to make higher highs, trading above the major resistance. Still not the best long-term investment. Definitely higher levels, but ever since February of 2021 has been hovering around the same level, same price. I believe the volume would probably also be not very high. SNDL. I feel like we talked about this one. SNDL. Yeah, so we talked about this one in a while. So this one ended up losing a ton of, so 96% of its value. Lots of manipulation. Not very interested in a company that is just not, like, way underperforming. Not very interested in something like that. All right, let's see if we can find something interesting. Okay, no, not very interested. Wedge up. Let's look at some other patterns. Cap and handle. IPHA. 5-year chart. Wow, interesting. Higher highs, continues to trade at this level that is still below the major trading price. Used to trade at back in 2020 at about $6.20 a share, currently trading at $4.50. Very small cap stock, so $371 million valuation of the company. Still on the overbought side, but continues making higher highs. So IPHA. I like the fact that the company continues to make higher highs. I do like that, and I would want to set up our alerts at or above for this one, and at or above for this level right here, at the next major resistance, and at the support level at or below, and then the next level of support, which is going to be right here at or below. Awesome. All right, there we go. So some of these stocks are very, very interesting. That's very interesting. Yeah, we haven't talked about some of these at all whatsoever. Haven't been on our radar in a while. Oyster Point Pharma. Yeah, continues making lower lows. It seems like it was able to find its bottom at about $18 a share. Not very interested in companies that are extremely volatile and don't really have any earnings that are positive. Still, everything is into negative. And I know that I'm still hovering over the stocks that are suggested by Yahoo Finance, but at the same time, some of the ones that they suggest are pretty cool. Alright, so let's go ahead and review maybe 2 more stocks, and let's go ahead and wrap this up. And yeah, this is really, really interesting. Some of these stocks we have not talked about at all whatsoever. And if you have any ideas for any of the stocks you want me to break down, don't hesitate to leave those in the comment section. We'll talk about this as well. AXU, MUSA. This one looks pretty interesting. REDU. Nope. Long-term investing into this one is too scary, too risky. Nothing major, something that stands out to me too much. LDU. LUB, what did I say? LUB continues making higher highs, just way too volatile, no volume. This is another thing that I don't really like about some of the stocks that we review. Some of the ones that pop up on FinWiz are extremely low volatility, even though they trigger some of the patterns to where they pop up on a certain charts, I guess, based on the charts that they're currently trading at right now. But they have almost no volume. They are extremely volatile and extremely manipulative, so I'm not very interested in that. But as long as S&P 500 continues to go up, everything else will continue to go up for the most part. So just got to be very, very careful, very scrupulous on what you're investing into. And before we go, I want us to look at TNT. So TNT is something that we talked about in multiple different videos. We talked about it on a separate video and during our live stream, and we can see the TNT they pay 7% in dividends, very similar to what British Petroleum pays. They're still on the oversold level, still hovering at around $29, almost $30 a share, which is very strong resistance level pretty much for this company. We saw a very strong level of support at $28 a share multiple times, and we just have to be very, very careful with investing into something like this, because over the past 5 years it had continued overall the trend of going down. But if you look at the max chart, it used to trade higher than $29 a share over the past 20 years. So right, so we see in 1999, 2000, and even 2001 used to trade at about $40 a share. And I just overall like investing into the companies that first of all, have a lot of history of improving their earnings. Their balance sheet is pretty good. They're well known company. Their 5G internet is actually faster than T-Mobile's, and it's actually publicly available information, even though T-Mobile claims that they had built the first nationwide 5G network, which they did. They were the first ones at the forefront of that. AT&T also has a coverage that is smaller than T-Mobile's, but the speeds at which AT&T provides their 5G internet is higher than the ones that T-Mobile provides. But we're just gonna have to monitor this one, and I want us to actually look into AT&T right here. Yeah, so we can see that it ended up breaking above those levels at which we set our alerts, because we still see the one that is tangling right here. We're gonna set 2 more alerts at the current level and the level that is going to be above, and at the level that is going to be expected to be a next resistance. We can also see a potential 6.5% up until the next level of resistance, and we can also see on the 1-year chart that the company is pretty much hovering at around the same price and is approaching those levels of not being overbought nor being oversold, just levels of resistance. So we're just going to be very, very careful and trade again, just like spoiled brats. 7% in dividends every year. That's pretty good. They haven't cut their dividends in a while, so we're just gonna have to monitor this one. But I do plan on adding up more of AT&T and potentially even Verizon too. VZ, Verizon Communication, and they pay 4.51% in dividends. Over the past 6 months, the company just continued to make lower lows, but it seems to be building up higher lows. 54, 55, $55.50 a share. I know Warren Buffett invested a lot of money into Verizon, so the expectation is pretty high for them, for Verizon. If you look at the max chart also, we can see that we had this exactly the same spike as the AT&T had, but they continued making higher highs all the way up until 2020. Throughout the entire decade. So 4.5% in dividends, another good stock that we talked about that we're going to just go ahead and add to our long-term investing portfolio potential buy. So VZ. And before I go, I want us to actually go over some of the stocks that we just talked about. So we're going to go ahead and copy this, and we're going to add on BP, then WLFC, which is a short-term swing, and we're going to add AT&T and Verizon. Boom, there we go. These are the stocks that I find to be the most undervalued, the ones that fit in pretty well into a long-term portfolio, except WLFC. And again, I hope you guys enjoyed this video. You know, there's nothing too crazy going on in the market that we wouldn't be able to handle with picking our portfolio very, very carefully. So the only thing that we need to do is just spend time. So again, if you have any questions, don't hesitate to leave me a comment. And yeah, I appreciate you guys watching. So I'll take care, and I will see you in the next one.